Mortgage rates drop for the first time in 5 weeks, with experts adjusting their forecasts. The average rate on a 30-year loan remains above 7% even after this week's decline. The average 30-year fixed mortgage rate dipped back towards 7% this week, settling at 7.09%, according to Freddie Mac. This is the first time the weekly average rate has fallen in over a month. Recent rate volatility, including this week's drop from 7.22% and last month's steady rise, has prompted some financial institutions to modify their mortgage outlook for the rest of 2024. An environment where rates continue to hover above 7% impacts both sellers and buyers. Many potential sellers remain hesitant to list their home and part with lower mortgage rates from years prior, adversely impacting supply and keeping house prices elevated, said Sam Kater, Freddie Mac's chief economist. These elevated house prices add to the overall affordability challenges that potential buyers face in this high-rate environment. Read more. Mortgage rates today, May 9, 2024. Rates move lower for the first time in weeks. Experts adjust the year-end outlook. Robust economic data and stubborn inflation have driven housing experts to change their forecast of where rates would land at the end of 2024. Fannie Mae, a government-backed mortgage institution, increased its year-end prediction to 6.4% from 5.9% earlier this year. Our forecast includes the Fed cutting interest rates 25 basis points 2 times in the fall, Douglas Duncan, Fannie Mae's chief economist, told Yahoo Finance. The Federal Reserve held the federal funds rate steady last week. Meanwhile, mortgage rates, influenced by the Fed's benchmark, have surged past 7% over the last 3 weeks. To land at or near the modified forecast, Duncan said the core personal consumption expenditure, PCE, the Fed's preferred gauge for inflation, will need to drop toward 2% for at least 3 consecutive months. The latest core PCE gained 2.8% in March year-over-year. The National Association of Realtors, NAR, now expects average rates to settle at 6.5% by year-end, modified from the 6.3% predicted at the beginning of the year. The Federal Reserve has delayed rate cuts, said Lawrence Yun, NAR's chief economist. I would have thought that by now, rates would be lower and rate cuts would have begun. Whatever rate cut the Federal Reserve does not do this year will simply get pushed back to 2025. They're calling for a September rate cut, but we'll see. Read more. Mortgage rates top 7%. Is this a good time to buy a house? Homebuyers hesitate amid volatile rates. Higher for longer rates mean homebuyers must shell out more of their monthly paycheck to afford a home.